Mark, thanks so much for being here.
Glad to be here.
I definitely appreciate you being here. We'll start with the really simple. First of all, my daughter has a question she's asked me to ask all of my future guests, and it's crazy, but Nestle Crunch Bars or no?
Or no?
Yeah. No. Do you like Nestle Crunch Bars?
Yes.
Yes. Okay.
If it has chocolate, I like it.
I'm keeping tally for her, so
okay,
thanks.
Good.
So tell us a little about Mark. Who are you? Where you come from? What's your education background? And start there.
Yeah, I mean, first, let me just congratulate Dan for starting this. Going from 0 to 1 is the hardest part. And anytime there's an inaugural something, it's to be celebrated. And so, congratulations for doing this.
Thank you.
I got involved in this because Dan reached out through my assistant if I wanted to do this. And Dan and I are both military veterans. And you'll hear more of this theme of veterans serving veterans as I talk about our company. But if a veteran reaches out and said, "Hey, can you do something?" The answer is, of course. When and where, and I'll be there, brother. Right? So there's that sort of bond, between veterans and veteran, entrepreneurs in particular. And so I'm honored to be here. It's a thrill. So I grew up in Colorado and served in the military for 9 years. And so this short bio on me is 9 years military, 2 years as a Wall Street lawyer. And then in 2013, I left that to co-found StreetShares with a very talented co-founder and friend named Mickey Konson, who was a senior banker at Capital One. So I'm military lawyer. I'm now a recovering or reformed lawyer, and now an entrepreneur.
That's awesome. Thank you for sharing that. So I'm curious now, and I'm hoping there's a couple other people that are curious, but with the law background and the military background, and now you're moving into a business. So first of all, what gave you the idea to start a business? And then the idea for StreetShares, where did that come from? And if I'm not mistaken, that was kind of started at the breakfast table.
That's right. Yeah. So, I think all entrepreneurs have something in them where they're always looking to create. They're always looking to build. And so I've always been entrepreneurial, I would say. Even while I was active duty, I had kind of like side gigs and side hustles going on, real estate things, fix and flips, that kind of thing. Did a nonprofit in Africa one time, just sort of curious to always build and start new things like all of you here, right? There's something in entrepreneurs that just makes us different from other people. Frankly, I mean, it's the greatness of America is found in, people like us in this room who just like to build stuff and like to try new things and don't mind the risk. And so that's kind of always been there to an extent. And frankly, both when I was in the military and when I was a lawyer, it was a bit suppressed because it couldn't be, right? Mm-hmm. It's tough to be too entrepreneurial in the military. There's a hierarchy, you kind of got to do what you're supposed to do. I found ways, and I maybe sort of ruffled a few feathers, whatever, but it worked out. And then as a lawyer, certainly it's a risk-averse profession, right? Your job is to manage risk, not embrace it.
And right? In the military too.
Yeah, that's right. And so this has always been there, but it's been a little bit suppressed, and it's come out in a few side gigs and side hustles over the years. And then the origins of StreetShares is I came back from Iraq in the summer of 2008 in May. And my belief is that great entrepreneurs, great companies solve great problems.
That's great.
And we're not great yet, but I'm trying to be, right? But I found a great problem. And the problem was that a generation of entrepreneurs like myself were going to leave the service in the wake of the financial crisis. Mm-hmm. So veterans have been becoming entrepreneurs for decades. Post-World War II, 49% of that generation went on to become a business owner or operator at some point in their lives. It's a huge number. That's been sort of a legacy, right? I think veterans, there's something about military training, the grit, the determination that just makes really good entrepreneurs. So we've been doing this for decades, right? Unique to my generation is I left the service right in the wake of the crisis. Mm-hmm. So, in essence, I was representative of, millions of veterans who would leave the service, try and become entrepreneurs, but for whom the banks weren't lending, right? And so I just spotted a problem. And then I had a theory, along with my co-founder, around affinity-based finance, which is kind of a label that we have for it. And what that means is if you're a military veteran and I'm making you a loan, and the loan comes from your fellow veterans, so you're being funded by your veterans, we're betting on the fact that you will try harder to pay back that loan than if we were some distant monolithic bank. That is that there's human trust that exists between populations, veterans, women, immigrant populations, church populations, communities, same towns, alumni associations, whatever. And if you can harness that trust, you can actually make financial services better and less risky. Now, no one on Wall Street was thinking about this, right? When they price something, they do it based on the risk and the cost, and there's no consideration given to the psychology. And so we had this idea based on some principles of behavioral economics, that there's a loyalty that could be harnessed and used to improve those transactions. And so my co-founder and I met at a Bob Evans in Oakton. And over, cold coffee and bad waffles, we just sort of, kicked around these ideas. And I mean, it was like founders love at first sight. I mean, we just clicked. And, you guys have met people like that where, you're just like firing together and it's fun. It's very, very engaging. It's addictive, frankly. And that was the two of us just kind of engaging on these ideas. At the time, I was a lawyer at a well-known law firm in downtown Washington, D.C. He was a fairly senior executive at Capital One Bank. He had 4 kids, I had 3. Both of our wives were stay-at-home moms. We were the sole breadwinners for our families. We had big mortgages in Northern Virginia and kids in private schools. I mean, so our cost basis was high and income was good and life was good. And we were about to throw a wrench into all that, right? And, we looked at each other and began to have these conversations. And over time, it became obvious that it was time to leave the security of the law firm and the good salary and jump out there and do something different.
That I'm going to say my mind's blown. So there's just so much there that, one, I didn't really know the full background there, just what I'm able to read online about you. And that's impressive. And I can speak to the veteran community specifically, and I would definitely be more inclined to pay back a loan to a veteran peer than just a bank who I had no existing relationship with. So that's an outstanding opportunity that you've seized there. And so talk a little bit about then what that process looks like, because you're a FinTech company is what your wording is. Tell us how you're incorporating that technology as part of that process. What does that look like? And how is that helping with getting funding for veteran startups?
So FinTech is short, obviously, for financial technology. And it basically means using technology to improve people's financial lives. Right? That's what we do. If you're not using technology to make life better, why use it? Right? It's supposed to be improving things, making it more streamlined, easier, and better. And so we simply apply that in the financial realm. So we are not a bank. There's no FDIC insurance. There's none of that. But we behave a lot like a bank. That is, we do some of the things that banks do. So veterans come to us looking for business loans. They apply over their phone. And in essence, we're doing to banks what Uber is doing to taxis, right? Which is this sort of disintermediated new way of doing things. That's a lot low cost. There's no branch offices. There's none of that. When we started out, the belief was, if you went to conferences like we went to, that, we're going to change banking. We're going to put banks out of business, right? Everyone's going to be lending to each other on their phones like we do. That dream lasted for a couple of years. And then folks said, no, banks have all the money and they've got all the customers. Okay. And so what you're seeing now more and more is that banks and fintechs like us are partnering together. Because they've got the money, they've got the customers, I've got the tech that allows these things to happen very, very quickly. And so banks are now partnering with folks like us, which is a great opportunity for us as well. So that's sort of the future of fintech, going from being a direct lender, which we still do. We've done about 110 million in small business loans. The vast majority of that, as you can see from the chart here, is going to veteran-owned or military spouse-owned businesses. That's our market. We are not exclusive there. That is, you don't have to be a veteran or military affiliated. That's just who we focus our marketing on. So we've done lots of lending. We're going to keep doing that. But now we're partnering more and more with the banks.
And so I want to come back for a second because I think I missed a good opportunity. But why is it that you talked about the veteran community specifically with regards to access to funding? Is there a specific challenge there? Because I know there is, but I was going to let you talk about it from your perspective, if that's all right.
Yeah, I mean, everyone was affected by the crisis, right? So, after the crisis, no business owners getting funding. But for veterans uniquely, we have a different profile in a couple different ways. One, we tend to look for smaller loans below about $100,000. There's actually a report that came out from the Fed and the SBA last week talking about this very thing, sort of chastising banks for not doing more to help veterans. So they want smaller loans. The problem is if you're a bank, the cost of underwriting a loan that's $50K is about the same as a loan that's $5 million. And so the $50K ones are just unprofitable. And so you just don't do those, maybe offer them a credit card and say, move along. And they focus on the big ones. So there's a product need that veteran entrepreneurs have that the banks don't serve well. And then also there's some complexities in our credit histories in our past. I moved 9 times when I was in the military. That's a lot, which means that I wasn't paying on a mortgage, for all those years. Right?
That was in 9 years. Mm-hmm. Yeah.
Divorce rates are higher, right? There's lots of things that sort of make the credit profile, and I don't want to bore you with finance, but, make the credit profile, the borrower profile of a veteran different and unique. So we've built some technology that specifically underwrites to veterans. And so we just have a way of doing it very efficiently. Folks apply for a loan, we will fund folks same day. Wow. We had a guy who came in through one of our partners at the USAA. He was a USAA member, came in and he needed $5,000 to make payroll that afternoon. And we got it to him like that.
Man, that's great.
Right.
You certainly have a hard time getting access like that from the traditional
Right.
banking relationship. So that's outstanding. So you also, so we talked about the veteran peer support component from a lending perspective, but you also incorporate the social responsibility in another aspect of your business. Is that right?
Yeah. So one of the prouder things that we've done is we have invented, in essence, a new investment security that's been filed with the SEC for public sale. And so anyone in this room can go and buy it. And it's called a veteran business bond. Mm-hmm. And it pays 5%, is liquid, and we use the money to fund veteran-owned companies. So there's nothing like it in the country that I'm aware of. It's social impact, liquidity, and decent rates. I personally have taken my savings out of Wells Fargo, where I was getting 0.17%. Yeah, and put it in this, right? And so that's a very innovative way that we bring the veteran and military supporting community into this. So the capital that we're lending out is coming from that population,
right?
Sort of reinforcing this sense of loyalty to pay back the loan.
Yeah.
And so it's a very, very cool invention that we've put together, and it's something that the banking world has never seen before. So it's pretty exciting.
That is super exciting. So that leads to another great question, I think, and that's so we're going to talk about a little bit about some of your successes, and if you don't mind sharing with us, you were just recognized as not an award winner yet, right?
We won this region, Mid-Atlantic, yes, for Ernst Young Entrepreneur of the Year, which is it's a big deal, and it's a big deal because you're vetted so thoroughly. It's panels of judges and lawyers and consultants and experts that look at it, and so it's a good one.
Yeah, and I'm not familiar, but Laura and I were reading about it earlier, and it was 30 years existence and one of the top entrepreneurial awards in the country. Mm-hmm. So that's pretty significant. Mm-hmm. But so, how much of your success would you attribute to timing, and how much of your success would you attribute to just dumb luck, or maybe just luck?
Yeah. First and foremost, I would say faith. Firstly in God, and secondly in the idea. I don't know how you do this absent some larger framework for why the world is the way it is, and that it's okay to take risks. Right. I think veterans, given that they've served overseas and they've been shot at often, the risk of starting a business is frankly just a lot lower. After you've done that, it's like, okay, what's the worst that can happen, right?
Not sleeping in a Humvee.
Exactly. And we live in, an amazing country that has mechanisms that allow us to strive, that allow us to reach, that allow allocation of capital from those who have it to those who need it, like us entrepreneurs, right? Allows for bankruptcy, right? Mm-hmm. If you screw up, you just reset and do it again, to be honest, right? It allows for, property rights. So if I go and add my labor to something and I file a patent on a security that we invented, which we did, that's now mine, right? And that kind of thing doesn't exist in every country. And so we live in a place where we're just blessed to have the opportunity, right? My view on it is it's like a baseball diamond, and everyone's trying to get back to home base. And some folks are born on first base, some on second, some on third, and we have two options, right? We can all look at each other and say, that's unfair that he or she is on second or third. Or we can say, you know what? I'm going to get around these bases as fast as I can and bring as many people with me as I can, right? And that's my approach. If you were born in America, you were born on first base. Just how it is, right? We live in an incredible country, right? And I know folks that have been born on second and born on third, they've got a huge advantage. But you know what? They didn't choose where they were born any more than I chose where I was born. And so let's just get around the bases and help as many people, between now and then that we can.
That's great. Make a plan and get there, right? Instead of making excuses as to why you're not there. Yeah. I love that. So, then how would you, let's talk about personally for a second, how would you define success for Mark?
So it's not about money. In part, it's about impact. I want to know how many military veterans can we help succeed in their entrepreneurial dreams, right? I'm not sure what the metric is. Is it, how many become millionaires, or how many can retire, by 50 or 60 or whatever it is? But it's something, right? There's a generation of people who have served their country. I believe if you go and serve, you should be among the first, to be able to benefit from our system. And on a personal level, I want to see as many of those folks succeed as possible, because they hire their veterans. It's good for them. It's good for the whole community. It's good for the country. It's good for everybody. If I can turn more and more veterans into entrepreneurs, and access to capital being their biggest problem, that's something that I can solve. On a personal level, I think it's about freedom, right? It's about being able to, by the way, with my last name, I get asked this a lot. I am not one of those Rockefellers. Right?
They wanted me to ask that, and I was like, he puts an L in there on purpose.
That's right. I've got a very sort of a complicated relationship with my last name, right? I was born and raised in Colorado, where no one seemed to really care. And then after the military, ended up in New York, went to the right schools, blah, 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 and was kind of running in those circles where now everyone assumed. And I can't go through life apologizing for who I am or explaining it every single time. And so my usual response was, when folks would ask, are you one of those Rockefellers? I would always say, it's not as close as my mother-in-law was hoping. And that was my answer, which is at once totally true and also sort of, mysterious. Well, you didn't answer the question. What does that mean? It's a big family. We've been here since 1730 or something. And I'm from another branch of the family tree. And so, I was born to middle-class parents. I paid for college with ROTC scholarships. Mm-hmm. I'm a very much an average guy, right? That was not born with those kind of advantages. But I was born with two loving parents who said, you can sort of, achieve whatever you want to achieve. Right. And was very blessed to be in a few situations where I could see need and see opportunity. But no, I'm not one of those Rockefellers.
No, and that's great. So in a minute, I want to get to what do you see for the success or the future of the business. But before I do, tell me, what role have mentors played? Because you brought up your parents being great mentors for your youth and where you're at now. So what role have mentors played in the success of the business so far?
Essential. So what I've done is, you've heard this idea of build your own personal board of advisors, right? Or board of directors, 3, 4, 5, 6 people, each of whom has a particular expertise. So I've done something very similar to that. I've got my leadership mentor, I've got my financing mentor. I've got my, West Coast Silicon Valley venture capital mentor, whom I go to with questions there. I've got my operational mentor. And so I've done something very similar to that. I've got my spiritual mentors, right? And so I think it's essential. I mean, none of us knows everything. None of us is as good as, all of us. The problem is with all of us, you have such disparate interests, right? So, if I want all of you to help me in my initiative, whatever it is, each of you has some very complex reasons or motives for helping me or not that I don't understand based on your unique life experience and, biases and values and all of that. And mentors allow you to find a handful of people that have gone ahead of you, align their interests with yours, and sort of handpick folks that have particular expertise. It's incredibly, incredibly important.
So from a startup perspective, when did the mentors come into play, first of all?
I've had mentors, frankly, throughout my life in various capacities. In the startup perspective, the first one was sort of before we started.
Okay.
It was someone where I was saying, I'm thinking about leaving the security of a job, and I'm the only breadwinner in this family, and going and doing something completely different at the age of 36, right? How should I be thinking about that? What are the risks, et cetera? And then I've picked up a few more mentors in specific areas as I've gone on, through the course of our company, and met people that sort of seemed like the right person for that.
So I've talked to a few people along the way in networking and in the business community who they realize the significance of having mentors and that mentor relationship, but they have a hard time finding those mentors. How would you suggest they go about finding the right mentors for their business and that relationship?
I think if you can get through to influential people, which is always hard because we all have gatekeepers and such, right? If you can get through to them, right, you'll find that they're very responsive. I have probably 3, 4, 5 veterans a week that sort of get through, and they're like, Mark, can you do a 15-minute phone call with me? I want to share an idea. And to the extent possible, I really try and fit those in. I do a lot of those, where I have nothing to gain from them. But they're a veteran, I'm a veteran, I want to see them win. And, I can take, 15 minutes, 30 minutes of my time and maybe help them along. Absolutely. There's a couple of those where I'm now sort of developing a, recurring relationship. And so they just, persistently sort of got through, and we began to develop something. But I would be pretty targeted. I would find people who are ahead of you, who are not, at your experience level, but folks who have paved the path ahead of you.
So some sort of common bond, have some significant or more experience in that industry, and be persistent. I love it. That's sometimes I think it's important to break things down to the simplest level possible, instead of being overwhelmed by the challenges that are in front of you. So that leads me to the next question, which is talk about one or two of the major challenges you faced between starting up and now, and some of the lessons learned from that. So your AAR, if you will, after action review, if you're familiar with the military. Yeah.
To help me shape these, can I get a sense from folks in the audience, like who's a business owner, who is, okay, so business owners, raise your hand. Okay, everyone is. Who is a sole proprietor? Just a one person deep company. Okay. How many folks don't have a business yet, but they want to? They're sort of at the exploratory, inspirational phase. Okay, 1. Okay, all right. So most folks, sounds like are business owners. Put your hand up if your company is older than 10 years. Okay. Leave it up if you, sorry. Hand up if you're older than 2 years. Okay, so a lot of newer companies. All right. Leave it up if you're older than 5 years. Older than 10 years. Older than 15 years.
Oof.
Okay. All right, so there's your mentor, right? Yeah. There's your mentor. There's my mentor, because I've been doing this for 5 years. You've been doing it for 15, right? 25. Incredible. Getting past 5. That's right. Okay, so most of the folks here are business owners, 2 to 5 years. That's sort of what I was sensing for most of the folks, and then a few folks that are at the dream stage. First thing is businesses fail ultimately for one reason and one reason only, and it's that the entrepreneur quits.
Oof.
Okay, everything else can be solved. The hardest ones to solve are access to capital, you're running out of cash, that kind of thing. But you can always get it, right? It's hard. You've got to be very, very scrappy. You may have to mortgage your house and go into, some very, risky situations, but you can do it. Product market fit, you don't quite have that. You don't quite know what the market wants. You can iterate and figure that out, right? The only reason why companies ultimately fail is because somebody gives up. At times, that's an okay choice, right? Path A was just not working out. The universe is telling you this is not working out. Shut it down and pursue path B. But oftentimes, there's a A1 or an A2 or an A3 that's there, and you just have to stick with it. So we've had a couple of times where it was scary, it was hard, and it required a lot of grit. Mm-hmm. Most of these times were before we got a new cash infusion. So we've raised, if you include sort of bridge rounds, I guess we've raised 5 rounds of public capital from a venture capitalist, right? External capital. And that's a big process, right? It's going around, it's meeting with venture capitalists, it's being told no a million times. You have this invention and it's like your baby, and you're taking it and you're like, here's my baby. It's ugly. Hurts. Here's my baby. It's ugly. Oh, that hurts, right? You hear that over and over and over again, especially when you're trying to do something really, really unique or unusual like we are. We had lots of investors look at us like we were just crazy. So there have been a few, low points where we were kind of running out of capital. All we were hearing was no's. And you're like, I don't know if we're going to find the right investor.
So when you get your capital in the early days, how were you running that?
Wow.
Yeah. So we left our jobs, my co-founder and I, and moved into my basement. By the way, good piece of advice. Yeah, never take on real estate costs unless they add to your customer experience. Oof. We were online, and so having some nice office or whatever meant nothing to my customers, and so don't do it. So we were in my basement for the first about 9 months.
Yes.
One of the low points to your question was we were probably 7-8 months into the basement, 6 months. And we had been pitching this idea to professional investors, and no one was biting.
This is the first stage.
The very first stage, yeah. So we had a prototype, we had a few ideas, we had this, amazing deck and these, persuasive guys, and nobody was biting on this thing. And, you begin to doubt yourself, like, is this just the stupidest idea, ever? So January, February of 2014 was a very dark time for us because we had been at it for 6-7 months, 0 salary, 0 income. So our families are burning through the savings that we had. I'll tell you a story, actually. The night before I left my law firm job, while I still had that job, my wife and I both went online and each got 6 credit cards just to give us the capacity, right? Because once you're gone, once you're an entrepreneur, who do you work for? Myself.
Right.
How long you been doing that? About 2 weeks, like no one's going to lend to you, right? No one.
No.
So we both applied. We walked away that night with like 150, 200K in borrowing capacity. Oh. And we used it. That's the scary part, right? So, this was a family ride, a family adventure ride. And I had a very gracious, faithful, patient wife who was like, sweetie, if this is what you want to do, let's do it. She said, we started it, in a 500 square foot apartment. We can go back to one, right? Let's give it let's roll the dice. Yeah. So yeah. Step number 1, phase number 1, marry the right person. Let's just start with that, right?
So that's the lesson learned?
Yeah, lesson learned. So that was the night before I left the law firm, right? I'm taking out all this credit card debt so that I could have it when I had it, right? And then, fast forward 6-7 months, nobody was biting. Like there was like no external interest in this thing. We had like pitched to some very good investors, and they're looking at us like we had, 3 heads. They're like, what are you talking about? Social loyalty and lending. And, they just didn't get it. And then got some very, very good advice from a mentor in Reston, a lawyer there.
Okay.
He said, fundamentally, you're a tech company, but you're fundamentally lending, right? Like that's the product or service that you're doing. You're, loans. Yes. Then get lending, right? Stop with the PowerPoint deck. Stop with all the fancy charts and whatever. Just get lending. And so we did 12 $100 test loans to people that we knew. My co-founder's neighbor. Hey, will you apply through this thing and take out a $100 business loan? Okay. The consignment shop that my wife shops at, right? And a few other folks like that. And now all of a sudden we had 12 customers. And testimonials, and our system is using technology to push and pull money and account for social loyalty and all these things. And it was a test of the plumbing, and the plumbing didn't leak, and this thing worked. And within about a month and a half, we went from 0 interest to 2 different groups competing to lead our next investment round. So the very long answer to your short question is we were, 8 months in, and we raised a $1.2 million seed round with a combination of friends and family. They were the 0.2, and then the 1 million came from 2 groups that were competing for it. We ended up very, very sort of skillfully taking the higher valuation from one, but the larger check from the other. And so that was just kind of a negotiation thing. And then we had, $1.2 million. We celebrated with some champagne and moved out of my office, or out of my basement, into a very primitive, not so great office space, but it wasn't my basement. So yeah, that was sort of 0 to 1 for us.
With regards to access to funding or lending, are there any suggestions for startups to make that process as smooth as possible? What would be your advice to them on that?
Getting capital for startups is very, very hard. Typically, loans will not be an option, because any lender, from a bank down to me, wants to know that you have the cash flows, the revenues to pay back that loan, right? If I'm going to give you a loan and the payment is going to be $500 a month, I've got to see from your cash flows that you can make that. No one out there, though, if you have tried, have solved the issue of venture debt, right? Early stage,
yes.
You're pre-revenue, but you want a loan. Because the risk of that is so high that it requires equity-like rewards, right?
Yes.
So equity risk, equity rewards. There are a few exceptions. There's convertible notes and all that kind of stuff, but by and large, these are the rules. There's also differences by sector. So there's some kind of companies that can raise equity capital, and there's some that can't, right? A high-tech, high-growth potential kind of company has a shot at raising, $1.2 million in the basement from venture capitalists, right? But if you're doing something, a coffee shop, for example, that's going to be very, very hard to do, right? You won't get venture investment on that kind of thing because the growth potential there isn't as high, right?
Sure.
So that's going to be more of kind of a split equity deal. Get 3-4 folks, neighbors, family, friends, to come in with you, a revenue sharing arrangement, something like that. So there's probably 5 or 6 hard, bad ways to raise capital for a brand new company, and you've got to figure out all of them. Right? So that's not encouraging, but it's true, right? And so you look at, your growth projections. You've got to know your numbers inside and out, which you hear a lot of. As an investor, I would care a whole lot about unit economics, right? 1 unit of whatever you're selling, what does it cost you to make that?
Right.
Your cost of goods sold, your revenue, your margins on that for 1 unit, to get a sense for how much, if it's profitable on 1, now we've got to be able to scale it enough to cover your fixed costs, right? And then we're good. So you've got to know your numbers very, very well inside and out. And it's just hard. My co-founder and I were up this thing one time at Harvard. So we won this, early on, won this award from Harvard, right? It was a venture pitch competition up there. And part of the prize was, in essence, to go up and spend a couple of days with a bunch of their faculty and, Harvard alumni, founders and such. And we're in this room of, 30 or 40 founders, and everyone's talking about their plan to raise money. And there was this one young female entrepreneur. He said, okay, here's my plan. I'm going to talk to 20, 30 venture capitalists, and I figure I'll get callbacks from, 5 or 6 of them, and then I'll have term sheets and offers from 3 or 4 of them, and I'll pick the best one. And my co-founder and I, who were, a few years into this and somewhat jaded, we're sort of like shaking our heads, and we're like add a 0 to all the numbers that you just mentioned, and you might be close. Like, you're going to talk to 200 people. Most of them will tell you no and that your baby's ugly, right? And then a few of them might give you a call back, and then one of them is going to take you right to the line, and they're going to quit on you. It's just hard. It's just hard, and there's really no way around it. And so, gird yourself, get ready, get tough, because there's 7 or 8 different ways to raise capital, and none of them are easy.
I think that's solid advice. And so before we get to a couple questions and answers from the audience, what do you see now as the future of your business? What does that look like? So what's success in short for the future of StreetShares?
Yeah, I think it's working with banks.
Okay.
In fact, I'm about to publish an op-ed sort of calling out some of the banks for not doing enough for veteran entrepreneurs in hopes that we sort of get their attention. And right now, the current draft of the op-ed, I'm willing to give them my technology for free if they'll just lend to more veterans, right? So I want banks to know that we're out here. I want banks to know that we have technology that will help them and partner with them in the future. So I think it's working with banks. It's continuing to scale through our partnerships. The number of folks that we're lending to. It's a scale game now for us, right? So we have a little engine and it works and it's profitable, but I've got to scale it now on a massive, massive level, which takes a lot more money and a lot more marketing dollars and all of that. So we're sort of at that point now where the widget works, the key ingredients are in place, and now we just have to fuel the fire quite a bit.
Yeah, that's good. That's good. Thank you for sharing that. We'll turn it over to questions and answers from the group for just a few minutes.
Yeah, no, I'd love it.
Yes, Bennett.
My mentor, he's been doing this for 25 years.
A long time.
So what about patenting the technology and licensing the technology?
Yeah, so Bennett's asking about licensing and patenting the technology that, Mark, you're using in your business.
Yes, which we've done. Yep. So we filed on those. We have 4 core values at our company. One of them is innovation, and that means I want our team to act like innovators, act like Thomas Edison's, act like owners, and invent stuff as we go. And everything that we invent that is patentable, we file on it. Yeah, so a large part of our enterprise value, I think, down the road is going to be the tech that we have built that's uniquely ours. Yeah.
Good. Anybody else? James.
What kind of percentage of failure on repayment?
So percentage of failure on repayment? Yep, that's a great question.
Yeah, it's about 4.5%, so it's actually quite low. Yeah.
Yeah, that's impressive. Yeah. And out of how many loans have you provided?
3,200.
3,200.
Yeah, 3,200 for about 110 million.
Yeah, okay. That's good. Devin.
What would you say is some advice that young entrepreneurs who are sort of on a lean startup, what advice would you give to them for sort of finding that funding and that support?
So the lean startup, I think, refers to 2 things, right? One is it's lean because you got no money, right? It's hard, right? The other is the actual, lean startup methodology from Eric Ries, right? Which is amazing, right? In essence, it's invent something, talk to 100 people about it, tweak it, talk to 100 more, and iterate early and very, very quickly to like zero in on that exact thing that works. So the second, I think, definition of lean startup, big fan. It's a great process to follow. The first one, how do you get by? I'm a big believer in the fact that you need to be making money as you go. right? You can defer sort of the upside for a while, but that's just unsustainable, right? And so I would be a little more flexible with my model and a little more responsive to your first paying customers, right? So if you run a small catering company, for example, and you find someone who's kind of a recurring customer of yours, I would really focus on that person and do everything that they need. Even if it's a little bit off from what I want, or if my vision for it was X and their need is Y, I would be very practical and go for that first paying customer at least for a while, and sort of just keep the gravy train going, right? And then on the side, in the meantime, you can figure out your own, your own things. But you can't starve, right? And so you have to be practical and pragmatic and just go with folks who will pay you for a little while. And that can be frustrating, right? Because in your head, you have an idea. But one of the biggest sort of mistakes that entrepreneurs make is they fall in love with an idea. They drink their own Kool-Aid. Then they're trying to find a market for their idea. That is, I've invented something that I think is awesome. Who will buy it? I don't know. I've got to go find someone to buy it, right? That's very, very hard, right? That's the Steve Jobs, invented the iPod. He invented something that none of us knew that we wanted or needed. And then we saw it and we're like, I've always needed one of these things, right? Those are very, very rare innovations, right? Most startups you focus on the problem, right? You go through life, there's a mindset of going through life looking for problems. And I've done this actually with my son. We were in New York City a few months ago, and we went for a walk one evening through Midtown, and I said, hey, buddy, exercise. I said, I want you to look for problems. When we get back to the hotel, we're going to talk about it, right? What do you see that's inefficient? What do you see that's painful? What do you see that, causes folks, problems, right? Develop a mindset where you go through life looking for pain points. Whoever invented the paperclip was just sick of their papers flying everywhere, right? Whoever invented shirt stays was just tired of the collar coming up above their lapel. That's right. So it's, if you focus on problems and you know those problems intimately inside and out, the solutions often kind of emerge. They're almost easier.
Yes.
Aspiring entrepreneurs like you, right? You're trying to figure out what's my thing, right? Probably are okay, what's some really clever thing I could invent or whatever? Change your mindset a little bit and just go through life looking for inefficiencies, pain points. What's annoying? What don't I like, right? And that's what you focus in on. And then you begin to study those things so intimately that then the solutions sort of emerge.
Yes, that's outstanding advice. More solid advice. So I don't think that there's any more questions. Any parting comments, something that you think I missed that you wanted to talk about? Maybe not that I missed, but if you wanted to add value here before we part.
So the Holy Grail is if you can do something, you can make money doing something that you authentically believe in, right? It's very, very hard. I'm not sure what the percentage is, but the vast majority of people in the world work to make money, work to live, but they don't live to work because it's just not that interesting, right? So I view it a bit like a Venn diagram, and folks have seen various versions of this. What are you good at? What is the world? That's one circle, right? What does the world need? That is, what they'll pay you for. Another circle, and then what's your interest or passion? And where those three circles overlap, like a Venn diagram, that is the bullseye. I personally have been, let's call it self-actualized, in the Maslowian sense, right? Maslow's hierarchy of needs. I've been self-actualized at work twice in my entire life. Once was one period when I was in the military where I was just doing what I was meant to do. I was good at it and the world needed it and it was fun and I was it's perfect, right? That lasted for a short period of time of my 9 years, right? The other 8 years were just, serving, paying the bills, just doing,
just a number.
Doing my best, right?
Yeah.
But, and then now this is my second time because what I'm doing now aligns with a population that I care about, It's something that I'm good at. My personal, philosophical and religious values, of just like helping people and, entrepreneurship being good for human beings, being good for the soul. Like what I'm doing now aligns with just who I am on so many levels that I'm just happy. Right?
That makes a world of difference.
And so, my parting thought would be to think about that diagram, like for you especially, right? What am I good at? What do I like are my passions? And what's going to pay, right?
Yes.
This idea of like, just go follow your passions, I think is a terrible, terrible advice, right? There's lots of people who follow their passions to the poorhouse. And there's many, many more who follow some path to riches, but they really don't like themselves. When I'm 85 years old living in a mansion, I do not want to look back and have made my money doing something that is not honorable, right?
So good.
You know what I mean?
Yes, I agree.
And so, try and find the intersection of those things. And it takes a lot of introspection, a lot of exploration. But if you can find that thing that aligns, what you're good at, what the world needs, again, focusing on those problems, and what you're interested in. I mean, that is the holy grail. And when you find those moments, and they're transient, right? These sort of three circles, they move around, and they overlap for moments, and they don't overlap, right? Or 2 out of 3 overlap. When you find all 3 overlapping, I mean, that's a red bullseye, and you've got to pull the trigger on that because, it's perfect. It's perfect. But it doesn't happen that often, and so be on the lookout for it. And when it comes, be fearless about acting.
Man, Mark, that's awesome. So thank you so much for coming out tonight. I enjoyed it. I hope that everyone else did. And let's give our guest a thank you.
And I'll stick around and chat with folks as long as they want. So
Yeah, please.
let's
Please.
chat.
You're more than welcome to hang out. Feel free to hang out. We've got about another hour of networking and departure. So whatever your schedule looks like, thank you all for joining us for the chat. And I look forward to chatting with some of you throughout the rest of the evening.
And real quick, let's give it up one time for Dan for starting this whole thing.